In this video, I'm going to give you a stupidly simple 5% a day Forex strategy that you can start looking for today. If you're tired of complex systems trying to draw a subjective order blocks and feeling like you need to be a genius to make money from markets, this video is for you. This is a mechanical and repeatable system that is designed to find you one high-quality 5-hour trade and then let you get on with your day. My name is Islam, and when I was escaping my 9-to-5 corporate job, I didn't have 8 hours a day to stare at charts all day long. I was forced to find a simple and mechanical edge over the markets that I can look for at specific time window. This strategy is one of the core systems that I use to scale my trading to 6 figures and gain back my freedom. I'm not going to bore you with a long lecture in this video. We're going to jump in straight into the real life examples, and then I'm going to break down the 2 indicators I use to get a higher probability trades, the exact entry rules, and the step-by-step system that you can follow. This is a Euro USD on the 15-minute time frame. This is 3rd January, and we do have the breakout to the upside. As you can see over here, the price is coming back and retesting the 60% retracement level of the FIB levels. The stop loss is going below the 80%, and the price is giving us a beautiful 6-hour trade. This is called the OP investing method number 1, and we are going to do a full month's backtest with it, and I'm going to show you a bunch of backtests where it worked, where it didn't, why it worked, and why it didn't work, and how to find an extra confluences, how to make this strategy actually work. Probably the most of you heard about the strategy which is called the orb strategy, opening range breakout. That is a really mechanical strategy, but the only difference between our strategy and that strategy, our strategy is ARB strategy. That is the Asian Range Breakout strategy. With the orb strategy, all you need is to just mark up the only one candle and then trade the breakout from that single candle. But with ARB strategy, with OP method number 1, we are trading the breakout from the whole session, or let's say the first 4 hours of that session. Okay guys, maybe you're wondering what the hell is those vertical stripes, the gray one, the green one, and the pink one. This is a sessions indicator which helps us to identify the first 4 hours of the Tokyo session and the first 2 hours, the beginning of the 2 hours of the London and the New York sessions. As you can see over here, the Tokyo from 20 to midnight. By the way, guys, you just need to go to the indicator sessions and just type the sessions. This is what we are going for. Sessions on chart, our AIF 9.6K. So basically, this is the settings of that indicator. Just copy this one by one, and this is a style like that I prefer following. After that, you're going to get these vertical stripes, the gray one, the green one, the pink one. All you have to do is just to draw the high and the low of the price action during the first 4 hours of the Tokyo session. So here's the first candle, here's the last candle, as you can see over here, and this candle over here created the highest point, the maximum point of the price action, and this candle over here created the minimum, the lowest point of the price action during those 4 hours. Basically, this time range is going to go as our price range. And basically what we need to trade with this strategy is to wait for the price to break out from this range and retest this range during the first 2 hours of the London or the New York sessions. That time we are going to get the highest probability, the best trades ever. And there are a couple of more kind of like the confirmations that we trade, that we use to get. I will be covering up all of that just as we proceed further, as we do the backtest. Okay, let's get started. Okay, as you can see over here, we did this setup, like we have covered it, like how it was. Let's move to the next day. Okay, here we have the 6th Jan. The price is just basically breaking to the upside, but it's never coming back to retest our Asian range. So we do have the breakout, but we don't have the retest, so we don't have a trade that day. The next day, the price is breaking up and it is retesting and reversing from this previous day high candle. And guys, basically this is a different story. And one of the first confluences that I teach inside our mentorship program is this, guys. When we do have the breakout from our Asian Asian range. Ideally, we want to see a retest of our Asian range first before the price goes and retests any extra kind of like the outside level. In that case, guys, there will be a higher probability of OP method number 1. But in this case, the price is breaking out and it's retesting the outside level directly. That is why we do have another trade, which is OP method number 2, guys. More about this strategy, I will leave the link below how you can learn about this one. So let's get next. As you can see over here, we are having some sweep of the Asian high before the London session. As you can see, this green zone is that London session. That's why during the London session we are breaking to the downside, but we are never coming back to retest our Asian range. That is why we are just living this day. And the next day, guys, over here again, like the price is breaking to the downside and it's going like exactly into the previous day low, and it's retesting that. Like, it's not giving us the OP method number 1. And by the way, guys, I totally forgot how you are going to enter this trade. Basically, we do have the Asian high, we do have the Asian low, we do have some price action over here. The price is breaking to the upside, let's say, and when it's coming back, guys, all we need is to get our FIB levels and draw it from the bottom of the breakout of the bottom of the Asian range to the top of the breakout. So basically, and you are going to place your entry at the 60% or 70% or sometimes 80%. Basically, for those who are beginning right now, I would suggest you to break down your trades into 3 parts: 60, 70, and 80. Your stop loss can go below 100%. When you are entering at the 60%, your stop loss can go below 80%. That is going to be like the best. But if you're entering at the 70% or 80%, your stop loss is ideally should be below the 100% FIB levels. And guys, and most of the times the price is going to give you 5R with this trade. Sometimes more, but not always less. Like 80% of the times it's going to give you 5R. That is why this is called the 5% strategy per day, because you're going to get like 5%. Like if you risk 1% on this trade, you're going to win 5% with it. Okay, let's move forward. Over here, as you can see, we do have the breakout to the downside. We are placing our trade, like we're drawing our FIB levels from the high to the low. We're placing our trade at the 70%, and the price is just sweeping this high and then just going to the downside, like in our direction, but without us, unfortunately. So we do have some losses. This is not some holy grail strategy, guys. The next day, guys, basically we do have the breakout, we do have some range. The price is not coming back to retest. So usually we do take our entry during the first 2 hours of the London or the New York session. The rest of the time, as you can see over here, basically we don't trade. We just close our trades, close our charts, and leave our day. That's why basically trading this strategy, all you need is just 15 minutes a day. Like whatever job you do you work in office, do you work outside, all you need is to check your charts. You can do that by phone as well, guys. Like ideally that's a laptop or the computer, but you can do that by phone as well. You don't need much time. You do the analysis once, you set your trades and forget about the charts. That's all. It's set and forget strategy. Okay, folks, this example, we do have the breakout to the upside. The price is coming down and retesting the 80% retracement level and then going to the upside, giving like a beautiful 5R trade. The next day, guys, the price is breaking to the downside before the London session, and then we are having a really nice breakout to the upside. Then we are entering at the 60% retracement level. The price is giving us entry once during the London session and twice during the New York session. The price is retesting and then boom, and it's giving us a beautiful 7R trade over here. Beautiful. Okay, let's move to the next day. We do have the sweep trade. As you can see, we have the sweep here. It's a OP method number 3, guys. This is a third strategy that we trade. And of course, if you want to learn more about that, I will leave the link at the end of this video for the next video where you can learn more about all of the 4 strategies that we trade daily to scale our trading to 6 or even 7 figures. Okay, this is OP method number 3. And next, what we are having OP method number 2 over here. And by the way, guys, we are having the breakout to the downside, but we are not trading this OP method number 1. Why? Guys, I only teach this to people inside the mentorship, but I'm feeling so generous today. So that's why, look, the context while you're trading is a king. And we have to look at the previous day candle over here. How does it look like? It's going to the downside and it's going to the upside. It's a V-shaped formation, guys. It's a V-shaped formation. If you open this on the daily time frame, it is going to look like this, and it's a pin bar. And what happens during this pin bar? Like most of the times, there's a very high chance, like 60% chance, that the next day is going to be bullish. The same happens here. Kind of like ideally, when we do have the V-shaped formation to the upside or inverse V-shaped formation to the downside, we look for the trades in that direction, in the direction of the reversal. So in this case, we either look for OP method number 2 from the previous day candle in the direction of the reversal, or we look for OP method number 1 to the upside. But in this case, guys, the price is just giving us OP method number 2 from the previous day low. So the context is the king. And basically the next day we are having the breakout, but kind of like the price is not giving us the entry on the Fib levels, you see. But like in the past, those people who know more about the OP investing methods, we had something like the break block, the candle that created the Asian high and the Asian low, that is considered to be as the break block, and we used to trade this, and our students trade this. Like we do have more about this inside our mentorship program. And as you can see over here, 50 hour trade, guys, break block entry. But yeah, this requires a little more time, a little more screen time, like to trade it, you know. Personally, I love my freedom. I didn't start trading just to be a slave for the charts. I got rid of my 9 to 5, my full-time job, and I'm happy that I'm free and I can spend my time with my family, with my wife, with my children, and that's why I prefer trading with the Fib levels. But you can trade with this one as well. The next day, guys, basically this is again like the Asian range is a bit extended. We don't have a nice breakout to the downside. We do have the breakout to the upside, but it's already too late to trade it. Like this is not during the first 2 hours. Okay. Here again, like the breakout size, or here the breakout size is a bit too much, is a bit too high, and that is one of the confirmations. And this is a little secret that you can learn inside our mentorship program. All the links will be below. The next, we do have the OP method number 3 day, giving us almost 10 hour. The next day, the price is breaking to the upside, never coming back to retest. The another day, we're having the OP method number 3. The price is ranging the next day, nothing interesting. Like, okay, like even if you wanted to trade the OP method number 1 over here, like that would have been a pretty good entry at the New York session. As you can see over here, the stop loss would have gone here, but your take profit only would have get hit only the next day, you see. So like basically I don't trade such stuff. Even if I've entered here, I would have closed somewhere here. Like I don't like uncertainty. This over here, we do have this breakout to the downside. My eyes are super trained to identify the Asian range. Probably it is not that obvious for you, but over here we do have Asian low, and over here we do have the Asian high. Okay, we are having this breakout, but the price is never coming back to retest the 60%, and instead it is retesting the break block over here, as you can see, and the damn break block is giving us crazy trade. Crazy. How a 10-hour trade. 10-hour trade. Guys, even risking 1% of your capital, this one trade can pass you any challenge. And the next day, you see, again, what does this look like? This is a V-shaped formation, right? And the next day, we're getting the OP method number 2 from the previous day low, and we are filtering out this trade, this OP method number 1 here. We're filtering out. How? Because we know about this confirmation, guys. And we have more confirmations inside our mentorship program, how you can get a higher chances of trading the OPMS number 1 or number 2 or number 3 or number 4, and combining all of these is going to be crazy. Okay, the next day, 31st January, we're wrapping up, and over here, look, we are breaking to the upside, but the previous day candle looks like a V-shape reversed. We're breaking to the downside, and we're entering at the 60% and getting stopped out. So this is what's happening on the 31st, and on the 3rd February, the next day, again, like you can see over here, this is Asian range. We are having this breakout to the upside. The price is retesting 60% and giving us a beautiful 5-hour trade. It's always 5-hour. The next day, we're getting the OPMS number 2, and so on, guys.